Time for the markets. Zac Ashmore in the studio with his usual keen insights. And by the way, feel free to reach out to Zac. Just visit our website at farmweek.tv. Zac?
Thanks, Mike. U.S. corn is looking to be the only game in town on the world markets for the next few months. As reported by Bloomberg, Brazil's running out of its own supply until next harvest, and prices in Argentina are rising. Meanwhile, the U.S. is boasting low prices and high inventory. Buyers, including Mexico and Japan, imported around 100,000 metric tons of corn late last month, so corn futures are looking good for now. And continued warming trade relations, China will relax import tariffs on various U.S. goods, including fruits and nuts, a small reversal of duties imposed on the commodities last fall. Farm Journal reports that U.S. apples, pears, citrus, cherries, and other fruits had been assessed an additional 10% tariff, adding to the 40% imposed by China in July of 2018. Now the Chinese will back down 5%, a sign that more reductions may be on the way. The new reduction takes effect on February 14th, Valentine's Day. As mentioned earlier in the show, the U.S. is looking to expand trade relations with Kenya. The African country has the strongest economy in its region, according to Brookings. Opening up a new trade deal could allow higher exports from the U.S. Let's get into the details. In 2019, two-way trade between Kenya and the U.S. was over $1 billion. Among the top U.S. goods exported to Kenya, wheat, $27 million last year. Top agricultural imports from Kenya, edible fruits, nuts, and coffee, a combined $89 million in 2019. Last week, we talked about soybeans falling in the markets. This week, they've gained ground as confidence rebuilds. Market analyst Tom Fitzenmeyer gives us his take.
There's potential in corn, but in beans, with the size of this Brazilian and Argentine soybean crops coming on here, I don't see. I mean, I know the bean carryout's half of what it was a year ago and all that, and that gets everybody kind of excited, but it's still, we're probably going to be looking at a 400 to 450 million bushel carryout on beans. And once again, if you pull those prevent plant acres in, use a trend line yield in beans, that could be a pretty good jump too. Again, I think soybeans in Brazil are a lot cheaper than U.S. beans. China historically doesn't tend to buy stuff that's expensive if they don't have to. So why wouldn't you, if you were China, why wouldn't you buy the cheap beans to fill what you need for a while, wait and see if we do plant all these acres, do have a decent crop, which we have a pretty good tendency to grow crops under a wide variety of conditions. We've proven that the last couple of years. Wait for U.S. bean prices to sag, and then step in and buy them after that's done. So the near term, it's really hard for me to get all that excited. I mean, I don't be negative, and I don't mean to say they're not going to buy anything, but they could play us a little bit.
With the Phase 1 China deal behind him and new deals in negotiation with Japan and other countries, U.S. Ag Secretary Sonny Perdue gave his thoughts on beef exports to Asia.
Really, from the beef cattle industry, Japan's a big deal. They are a huge consumer and a huge lover of our U.S. beef, and getting that Japan deal done, you know, we kind of gasped when the president said TPP is bad. We sort of said, oh no, and then we were wondering if he was going to validate that, and he has. What we've done with Japan, obviously, is open that market up again in a bilateral relationship. We've got a designated quota there that is not going to be subject to that higher tariff. We're going to be treated like other beef producers. We were excited about getting beef back into China in summer of 17 for the first time in about 13 years. But I think we'll see that market grow with the Phase 1 agreement there. And I think the big deal there, it's an enforceable deal. There are big numbers they have to meet in an enforceable, unilaterally enforceable way. But the big deal is we got those non-tariff barriers on beef removed, the age restriction and the maximum residue levels restricted of veterinary drugs. So that's a big deal there in Phase 1. And then again, having the certainty with our closest neighbors and allies, Mexico and Canada, and certainly from the dairy sector as well in Canada. But overall, we know that these are huge consumers of U.S. beef as well.
Trade with Asia isn't the only deal the U.S. is hoping to push. With Brexit comes an opportunity for American beef to find its way into Britain and the EU. But there have been hurdles keeping trade at bay, namely selective restrictions. Once again, Sonny Perdue explains.
I think there'll be a huge consumer, and that's our hope. I think the Europeans love U.S. beef. It's really their politicians and leaders that have sort of done these non-tariff barriers over those issues that have kept U.S. beef out. So what we're asking the EU and European, UK, as well as the European countries, is to just recognize international standards of safety and health. When we trade, you got to have standards, just like grain standards or beef and cattle and hog standards. You got to have standards that are recognizable and accepted, and that's how we can continue to trade. If they're willing to do that, I'm confident the American producer can compete anywhere in the world.
And that's it for a deeper look into the markets. Remember, it's an election year. There could be a lot more on the way. I certainly wouldn't be surprised.